To What's Going On with Lady D today. I'm your host, Lady D. Join us every Thursday at 4 p.m. for another breakthrough conversation. Be a guest on our show, 216 571 2235. Tune in to KAZ Radio Podcast Studio.
Sign nothing, steal nothing, call anybody.
Okay. Well, good afternoon, and I am Lady D with What's Going On Today. And today we are joined by a special guest, no other than James Oliver. He is our seasoned tax expert dedicated to helping individuals like yourself and business navigate taxes and minimize savings. Get ready for some valuable insight just in time for the tax season. Welcome, Mr. Oliver.
Well, thank you for having me again. It's a
And
pleasure.
Happy New Year to you.
Happy New Year. Man, time went by so fast. I just can't believe.
I'm telling you.
Yes.
And just sitting here today is the 16th. Half of the month is already over with.
Exactly.
Okay, come on. Something got to slow down here.
Please.
Okay.
Please. It's just going too fast for me.
Yes. Well, Mr. Oliver, I want you to tell our guests a little bit of something about yourself and what it is that you do.
Well, I am a tax strategist, a money coach. I am an enrolled agent. And so my specialty is obviously doing taxes, but around taxes is planning around taxes. And so to help my clients or help our clients to save as much as they can so they can pay as little as possible. So that's basically in a nutshell what I do.
Okay. So, is there a better way of keeping track of your tax information? I mean, because, paper is like being deleted or going away.
Well, there are apps. There are plenty of apps that people use that they can actually literally take a picture of their receipts, so that if they lose the receipts or the receipts are faded, that those apps will capture those things and also will add them up for them.
Okay.
And so there's several apps out there. It's just a matter of looking up, even like with mileage IQ will keep track of your mileage for your car. And so one of the things I suggested at the beginning of the year, if you're using your car for business, then first thing you need to do is to write down that odometer reading for January. So you'll know what you started with. And then we're going to do another reading in December. So that between January and December, you'll know how many miles you traveled. And so if you haven't done that, then you need to do that if you have a car that you use for business.
Okay.
So that's one of the things that I suggest that you do immediately, because you're already, like you said, 16 days behind.
Yes, right.
So at least if you can capture the rest of the year.
You can try to catch up and at least recall what you spent or how many miles you did in the beginning of the year.
Right.
Even what about your gas? You said you're talking about your gas mileage.
Right.
Now, what about repairs to your vehicle if you're using it for your business? Is that a tax write-off?
Yes. Well, see, you have actually two ways to write off your car. One way is called actual expenses, and actual expenses, just what that is the amount of gas that you spend,
Okay.
repairs,
Okay.
Tires, insurance, and anything you spend on the car that you can write off. The second way, which is the IRS way, is to do a percentage by mileage. In other words, you go so many miles for business and you multiply that number by a rate. And so for 2024, that rate is 67 cents. And so for every mile that you drive, you can use that. And sometimes that's easier to keep track of because people don't always keep the gas receipts. But your trip from one place to another, like say if you travel downtown for your business, the distance doesn't change. So you can kind of recalculate that easier than recapturing your gas receipts that you may have misplaced or never got in the first place. But even in either way, you still have to keep track of your mileage, because the IRS knows if you only have one car, you're not using it 100% for business.
Exactly.
And so that's why it's very, very important to keep a log. And once again, you can keep a log on paper. You can keep a log on your phone. You can keep a log on the internet. So there's several ways to keep that. So I would suggest this is a good time to take care of that. Do that now.
So now, if you have a business, what kind of business expense can be written off this year?
Okay. So some of the expenses. Let me say this at the outset. We are in a transition right now because we will have a new administration coming in next week, and so when President Trump was president, the previous time he was president,
Right.
8 years ago, he enacted something called the Tax Cuts and Jobs Act. And so with that particular act, it was only temporary. Now, his plan when he enacted this was to, because he couldn't get a full consensus with the Senate, was to just, it was temporary. And all the things that he had in that tax act back in 2018 was due to expire this year. Now, of course, he anticipated to have 2 straight terms. So he figured after his term, it would go away.
Right.
But since the unthinkable happened that he didn't get reelected, and so now he's elected on the year that this is supposed to expire.
Okay.
He's got to probably deal with that, and so he either is going to make it permanent, or they can let it expire. I don't think they're going to let it expire with him coming back in office.
Okay.
Okay. But one of the things that you cannot write off, and people ask me this all the time, since as of 2018, is entertainment. Entertainment has not been and is not right now, as it stands, a deductible item. So let's say, for an example, the Cavs are doing great. Let's say you take one of your business clients to a Cavaliers game.
Okay.
Well, the cost for the ticket for the Cavaliers game is not tax deductible. However, if you buy a meal for your client at the time that you're there, the meal is deductible, but the cost of the ticket is not.
So even if we are having a meeting in between halftime,
Right, and
you can't get a portion of.
No, you cannot take any of that ticket. So, and even if you decide to say, "Hey, we just had a snack here. We're going to go out to get a real meal someplace else afterwards," that meal is tax deductible.
Okay.
You know, or if you eat before, during, or after the game, meals are deductible. But entertainment, as it stands right now, is no longer deductible.
Okay.
So now, of course, if this expires as it is, just as it is right now, then starting next year, entertainment will be deductible. But once again, I doubt that's going to happen with President Trump coming back in office. He's going to make sure, he's going to tinker with this somehow. Who knows how he's going to do it, but I think that it will be extended.
Yeah, because I know when I was working, they were making a lot of changes about entertainment, accepting gifts, to do different things. You know, they were doing away with it then.
Right.
You
right.
know,
And so,
which you could, and then if you did accept it, before you accepted it, it had to be approved.
right,
you know.
right. And so, gifts are still $25. You can only give a gift towards, and that's to a specific person. Anything over $25 is not deductible. So there's a limitation on the gift.
Wow.
So I'm not sure people know that, but yeah.
No, I
as being tax deductible, you can give anybody anything you want.
Right.
However, if you want it to be tax deductible for your business,
Yeah.
the cap is $25.
$25.
Yes, ma'am.
Okay, so what about if you donate items to charity?
Oh, okay. Now, if your business donates items to a charity, then that full amount can be deductible. Let's say, for an example, I wanted to donate to my church uniforms so they can have a baseball team or a football team. And so the uniforms that I would pay for and give that to the church, that whole amount would be deductible.
I got it. Now, you said church.
Yes,
Is paying your tithes tax deductible?
absolutely. But see, here's the thing. Starting in 2018, under the Tax Cuts and Jobs Act, your standard deduction doubled. And so for 2024, for an example, for this year, in order for you to itemize as a single person, you would need $14,000 in tithes and other things in order to be able
To write it off?
to write it off. If you have less than 14,000, you just get the standard. So just to say, so you know, for single people, it's 14,600. For married couples, it's 29,200. And if you're a head of household having a dependent, the standard deduction is $21,900. So there's about 4 or 5 categories that would be inclusive of your itemized deduction. It would be medical, it would be taxes, it would be interest like on your like mortgages, then there's tithes, and there's miscellaneous. And so when you add those categories together, if they do not equal or exceed the standard amount, then you automatically get the standard.
I see. So, and medical is a tax deductible item.
Yes, it is. But once again, you have 2 thresholds to go with medical. Medical is one of those situations where whatever your gross income is, your adjusted gross income, you have to cross 7.5% of that amount. So let's say you made $100,000, and your adjusted gross income was $100,000. 7% of $100,000 is $7,000. So the first $7,000 of medical expenses would not be deductible. It's everything over $7,001 would be deductible for medical.
You know, this is just too much for my brain to calculate. Try to keep up with. I would definitely need to have a tax professional like yourself to guide me and take me through all of these little steps. And me, the note taker, I would have to be jotting down everything.
Well, that's why we're here to help out for those who don't want to be meticulous, because the tax laws changes all the time. And, you know, in fact, it was at one point it was 10%, then 7.5%, then it went back to 7.5%. So, you know, it changes all the time.
It's all the time. So now, what do we have looking for coming this year? What's changing?
Well, a couple things. One of the things that I think that people don't realize that happens is that you could receive a Form 1099-K. And so what is a Form 1099-K?
Yeah.
That is where you receive monies for activities. And sometimes it would be business, sometimes it's not. Let me give you an example.
Okay.
For an example, I work in an office with a bunch of accountants. And so let's say, for an example, I say, I want to go to Simon's, and people say, hey, James, can you buy me a sandwich? Can you buy me a sandwich? Okay. So I go out, and there's 10 people in the office, and let's say I spend $150. I could spend some money for me, but $150 towards my other constituents, my colleagues.
Mm-hmm.
And so they say, James, instead of giving you the money, can I just Zelle you that money?
Right.
Or can I, and so if you do that, then through the banks, or there's other apps that you can do. If you do that enough, you'll get a 1099-K saying that you received,
Oh.
you know, and the threshold for this year is $5,000. And so if I did that, let's say 3 times a month, I'd be at $7,000. Now, granted, for me, because it is not a business expense, okay, I would have to then say, even though I received this 1099-K for people cash apping me and Zelling me, I now have to write this off and say, hey guys, even though I got this 1099-K, this was not business. Now, unlike, let's say, for an example, in a barber shop or hair salon, when people pay their stylist money through Zelle or Cash App, that is business.
Right.
Okay. But see, once again, and they will get a 1099-K as well. But see, IRS doesn't know the difference between the barber or the hairstylist or James who's being just reimbursed for lunches.
Okay.
And so if you have that kind of situation, and if some of that money is for non-business activity, then you will have to show that where it came in as income, but then you write it back off as a non-business activity. And you cannot ignore that, because what happens if you ignore it, you say, well, I know I didn't have any business, and you don't, and you'll get a letter from the IRS saying, hey, Mr. So-and-so, we noticed that you didn't claim from the 1099-K this $7,000 on your tax return. And so that's why it's better to report it, to say it came in, but then there's another form that will say this was just for non-business activities. This is reimbursements for lunch, or someone reimbursed me for something else.
Right.
You know, or, you know, mom sent me some money from, she cashed at me, whatever it came from.
Right.
So once again, you just got to be careful, because that threshold for 2025 is supposed to go from 5,000 to 2,500. So, because once again, IRS is trying to find out ways to catch people making money and not reporting it.
Right.
So this is one of their ways that they're trying to do. So, you know, and obviously this will be more so for people who are in the business, cash business, like your hairstylists, your nail techs, your barbers, who probably get a lot of cash apps
Yeah.
for instead of people paying them cash.
Right.
Okay. Now, coincidentally, you might have a few people like me that will be in a situation where people reimburse me for non-business activities, but the lion's share of people who are getting that are people who are in business.
Now, on those apps, do they have something where you can notate it for your own personal use, what it was?
Nope.
So
All it says is it came from this person and how much it is. There's no line. There's no say parentheses that says for lunch only. There's all it basically says this is what came into the checking account for such and such person from such and such person. And so, it would be a nightmare for the banks to kind of keep track of exactly.
So it's up to you to keep track of that
Exactly.
yourself, because
Exactly.
you can also get that printout from your bank.
Mm-hmm.
You get a bank statement every month anyway,
Right,
that
right.
you can get, and then you can just highlight what it was, and then that's keeping track of your business.
Yes.
And this is going to be for business owners and just people, non-business owners as well.
Right. Anybody who gets a cash app for
Cash app.
anything, like I said, if parents do that with their children,
Right.
someone's at school and says, "Hey, mom, hey, dad, I need
Cash app me.
Yeah, can you cash app? Yeah, I need some money for lunch. I need some money for tuition. I need money for books," and they do that back and forth. Then once again, that child or that student will get a cash app if it's over $5,000, and next year's over $2,500. And so now they have to, just like I said, report that, saying, "Hey, this was just money mom gave me or my parents gave me for this and that." So once again, IRS is trying to, we have this big deficit, and so IRS is trying to.
We always have a deficit. I really want to know. I mean, I don't understand. We have this big deficit, but then we take all this money and we go over and we rescue other countries and rebuild them. And, they go and drop bombs. And here we go off to giving all our money. But then we over here, the people in the States, we've got a deficit. So what are we doing? The people are funding and keeping the rest of the world alive while we're not getting our due share.
Well, I think our congressional people, one of the things they see, it's not their money, it's our money. So they kind of spend it the way they want to. I'm sure if it was coming out of their pockets, they would have a whole different viewpoint. But since it's not their money, they spend it the way they feel it should be spent.
I just still want my 40 acres.
Okay. Well, I guarantee you the new administration ain't giving anybody no 40 acres. So that you can keep that for maybe another 4 years because it's not going to happen under this watch.
Okay, so now Bitcoin is the big thing going. Now, is that a tax deductible? How do they do that, Bitcoin?
Okay, so Bitcoin falls under what's called digital assets. And so, once again, IRS is trying to wrap their arms around people who are buying Bitcoins, people who are investing in Bitcoins, people who are using Bitcoins. And so, you could receive and next year, they plan to formally have what's called a 1099 DA, standing for digital assets.
I just love the IRS.
Yeah,
They got a form for everything.
Right. But so technically it's not, and you could receive something this year, and then depending on how you've used the digital asset, if you're investing in a digital asset, then it's no different than you would get, let's say, if you invested in stock, that you bought it at one price and you sold it for another price.
Okay.
And so that's their way, once again, to get people to report their income.
Like they gonna report their
Right.
income?
Well, see, once again, there's a tendency for the public, if they sometimes feel they could get away with not reporting certain things,
Right.
they're not going to report it. And so the government's trying to, once again, wrap their arms away and say, how can we monitor this so we can catch these sales, these transactions? And so right now, because they don't have a formal 1099 DA supposed to come out next year, there's a place on the return that you're supposed to report this. And so, but once again, you could get something saying that you had some income, but it doesn't say what you paid for it. And so let's say, for an example, it might say that you receive $50,000 cash for your digital asset. Okay, well, it might have cost you 25 to get to 50.
Right.
So now there's a subtraction there. So it's not the whole $50,000 that's taxable. It's the 50,000 minus the 25,000 or whatever you paid for it. it's like I said, it's treated like an asset or like a stock.
I see.
But once again, you got to keep records of what you pay for things, and then if you sell it, what you sold it for, and it's the difference is where the profit is. And then if you keep it that asset for over a year, then it's considered what's called a capital gains, which is a much favorable treatment than a short-term gain. A short-term gain is anything that's held less than 12 months, and it's just taxed at your regular tax rate. So
Okay.
if you're in the 37% tax bracket and you sold something short-term, that's where you're going to be taxed at. Whereas if you're in the 37% tax bracket and you have a long-term capital gain, it's only 20% and not the
Okay.
30%.
So long term is over past a year.
Yes, ma'am.
I see.
Yes.
I see. I'm learning some some new vocabulary. Tax vocabulary. Tax communications. Okay, so let's talk about. There was something someone had mentioned to me. We had spoke of it earlier before the show.
Yes, we were talking about BOI,
BOI.
Beneficial Ownership Information, and it's under the new Corporate Transparency Act.
Tell our listeners, what is that?
Okay.
Just in case they're not familiar with that term.
Okay, the Corporate Transparency Act is a requirement that the government is trying to get all businesses that are LLCs.
Okay.
Now, once again, when I say LLCs, this is people who have filed through the state to get an LLC. Now, if I just open a business and say I'm just going to have an LLC and don't go through the state to formalize it, then I'm not required. But if I went through the state to check the name, to get the DBA, then I went to the IRS and get my
Your number.
right employee identification number.
Right.
Now you are in that pool of people that need to report who the owners are.
Okay.
So any owner that has more than 20% of ownership within this business or has significant control, the fence then under the federal government, and it's not really a tax issue, it's a federal government issue, need to report it. Now the problem is that this has been going back and forth like a ping pong ball, in that those people who had LLCs prior to 2024, the original date for them to do this reporting was December 31st of 2024.
Okay.
Now, if you form the LLC within 2024, let's say last year you filed it, you actually technically only had 60 days to report it under the Corporate Transparency Act. And let's say if someone decides to do a corporation this year, you only have 30 days. So part of the problem with this situation was that one of the things the IRS was trying to catch people who were laundering and drug trafficking. That's what they say. That's why they did this. This act has been around since 2021, but they kind of waited to 2024 to enforce it. So because of some other legal ease, because they're in Texas, they filed an injunction saying this is intrusive, this is against our rights, this is too, and so the government then put a stay and says, okay, we will not, you do not have to file by the 24th or the end of December,
Right.
this thing. Then there was something that overturned that and said, well, now you will have to file this thing. And then someone challenged that. So once again, it's like a ping pong ball, back and forth, back and forth.
Wow.
And so right now, as of today, there is no timeline as to when they're going to file this BOI information. And so, and the penalty was this, is that if you didn't file it by December 31st, then there was going to be a $500 a day penalty for not filing it. So it was pretty steep. And so, and not only that, you could also spend some time in the pokey, if they catch you.
No, not the pokey.
Yes, ma'am. So that's why this was pretty serious. And so once again, right now, it is kind of on hold. But if it goes through, then you need to be aware of how much time they're going to give you, because they felt that since this kind of started late in terms of this being put on hold, since it was due by, I figure if it ever comes back through, you probably have maybe 30 days or less to file it. And so, but as of December, before this injunction came about, probably 70% of the people who needed to file hadn't filed yet, because everybody was kind of waiting to the last minute to do it.
Right.
And so because of that, because of this injunction and the subsequent injunction, right now it's on hold, and so we're kind of waiting to hear from the federal government to say, in terms of the higher courts, to say yay or nay on this thing. And once again, this is just for small businesses. This is not
Okay.
for the big corporations, because as far as IRS is concerned or the FinCEN is concerned, they got enough information on AT&T. They know who they are. They know who Bank of America is because of all the other filings they have. We're
Right.
talking about these small
Small
businesses.
businesses.
Yes. So that's what the target was for, against the small businesses.
Wow, the small businessman just don't stand a chance in big America, huh?
Well, it's one of those situations where they thought that, once again, we're trying to catch certain people doing things illegally.
But the small businessman, that's why you're a small businessman. Where you gonna get big drugs from? You know, we've already made marijuana legal.
That's true.
You know,
so that's no longer illegal. So, but even though it's legal,
I hear it's not real. It's legal, but then it's not legal
Okay.
to a degree.
so here's how this works. On a federal basis, on a national basis, it's not legal. On a state by state basis, it is legal. And so now, if you were in the marijuana business and lived in Ohio, where it is quote unquote legal, you would only have very, very few deductions, because as far as the federal government is concerned, this still is an illegal substance. So the only thing you could write off is your income and then the expenses against what you paid for. Let's say if you spent, $10,000 of marijuana, that's all you can write off. You couldn't. If you had a store, you can't write that off. All the other expenses surrounding that, none of that's deductible, because IRS still considers this an illegal substance. So it has not got federal approval. It's
Right.
only this is state by state.
Okay, so therefore, if I'm buying me some pot today and I have it for medical use, and I save all my receipts, can I write that off? Can it fall up under the medical deduction?
If you have the proper medical people signing off saying yes, you can write it off.
You can.
Right, but remember that. But the store who's selling it to you, okay, if they're in the store in the plaza, the rent that they pay for that store is not deductible. The phones, the lights, none of that. The only thing that's deductible is the cost of the drug, and that's all that is deductible.
Really?
Yes, ma'am.
So they don't get any benefits?
No. Now, of course, that's why probably those places they have several other things. They might sell also cigars,
Right.
some other stuff.
Yeah,
No
they
one's-
sell a lot of other different
Right.
things just besides that.
Right, so they can have the write-offs on their business, because they know
Oh.
that if their accountant says it has schooled them correctly, then they know that just having just a marijuana store, there'd be very, very few write-offs, which is why they now have other activities, other things that they're selling.
I see.
So-
Wow, there's just so much to know.
Yes.
Wow. So tell our listeners, where can they give you a call? Because, you've got a lot of information and we can't digest this right now over dinner today.
Well, I can be reached at 216-491-9350, and that's JC and Associates Tax and Financial. Once again, it's JC Associates Tax and Financial at 216-491-9350.
That is something else. Wow. So we have to just stay abreast and stay up on top of all these changes, because, like you said, this new law that they're going back playing ping pong with, that's really wicked, because it's not giving you a fair time to get ahead. Now, is that form something that they can fill out on their own, or would it be smart to come to someone like you to help
If
assist
someone's
with that?
comfortable, of course, the government says that they made this form simple enough so that the individual can fill it out. However, if you feel uncomfortable, then people are using accountants, people are using attorneys, or the like to help them fill it out. And so, there was a little bit of a battle between the accountants and attorneys. Said, well, this is a legal document, and there was a little debate back and forth, and it basically ended up saying an accountant can fill it out. You don't have to be an attorney to fill it out. And because IRS, once again, not IRS, but the federal government under FinCEN, the Federal Crimes Network said, we made this form so simple that an individual who owns this LLC, if he just walks through it, should be able to fill it out himself.
Okay.
Well, they said that about the tax laws too, though.
Yeah, right. Until you mess up and then
Right.
you be penalized.
Right, exactly.
There's always a do to the don't and a don't to the do.
Right.
I want to ask this here. What about the credit card? Can you write off the interest from your credit cards?
Yes and no.
Okay.
Well, the no part is if it's for personal use, no. But if you use your credit card for business use,
You can.
You can.
All right. Well, where's what we're going to take away with today? James will be back next month.
Yes.
And I want you to give our listeners that information because there's just so much to know and so much to get. And you need to stay up on top of it because you pay for not knowing.
Yes. Right. Okay, once again, the name of the business is JC and Associates, Tax and Financial. The phone number that I can be reached at is 216-491-9350.
Excellent. So now that's what's going on today here. And I want to thank you for listening. Stay inspired and share this episode with someone who could benefit from saving some money. And we'll see you next time on What's Going On with Lady D. Thanks for watching. Join us every Thursday, and you too can be a guest straight from KAZ Radio Podcast Studio. You know, this is